Style, strategy, and plan. Trading, poker, comparisons. All right, this can be an interesting one. I'm planning to do something like this for a while and kind of waiting for the right day to do it, especially in a market that maybe wasn't moving all that much. So it would be a good time to look at something that wasn't really looking at charts, that was more talking about trading styles. Most of you know, many of you know, that I love to play poker, and I plan on doing that a lot once the day comes down the road that I retire from trading pretty much full time and doing this every single day with you. I've been playing poker for money since I was about 13 years old. That's 55 years. Wow, almost 55 years. I've been playing at casinos since I was 17. Yeah, I've always looked older than my age. I played in the Grand Prix of Poker and the WSOP, in lots of regional tournaments. I've played thousands and thousands of hours of poker online and countless hundreds of thousands of hands of poker for sure. And read many books on playing poker. And I've also read countless articles on comparing the aspects of being a trader with that of being a poker player. And there are many commonalities between the approaches and the personal traits. So I thought it would be really interesting to go over them, kind of share them, and get some maybe a broader understanding about trading. And I think that there'll be for some people, just the poker references might be interesting also. I think there's something in here for all. One of the things that prompted me to do this is because I hear the term pot odds thrown around a lot in reference to the stock market, and when I hear how the term pot odds is being used, it's annoying to me, actually. It pisses me off because in a way, it's kind of sets up novice traders for getting themselves into some trouble because they really don't understand. And the professional traders that throw around the term pot odds, I don't think they understand it easy. So there's more on that coming. I'm going to talk about that actually in number 7 of 7 slides that I'm going to talk about right in here as we look at the similarities between trading and poker. This, I think, is going to be, really interesting. So let's start out with the first slide and just talk a little bit about trading and poker and how they are both approached with a plan. So when a lot of people, or most people, when they're getting into trading, they will start out by just getting some just general basic experience trading in the markets. They might be trading simulation. They might be trading just one or two stocks and just trading a little bit and getting some experience. So a lot of people don't start out with a plan, but then eventually they learn that they have to approach the market with a plan. It's surprising how many people I work with or have worked with in the past that are approaching the market really without a trading plan, and that creates a lot of difficulty. There's a lot of different things you can put in a plan, and I have traders that have one-page plan, and I have one trader, a hedge fund guy, that has a 60-page plan. So it doesn't have to be that involved, but trading, basically, it's important to have a very basic plan where you have your risk parameters written down, the trade size that you're going to take, the amount of risk per trade, the amount of risk in your entire portfolio, the particular size of the bias in your portfolio, the amount of capital committed per trade, per at any one time that you have at risk. And overall, the plan in there has a good sense of discipline and money management. We'll talk a little bit more about discipline also. In poker, it really is very, very much the same. You're going to know your risk parameters. You're going to know the size of the game that you're going to trade in, and the one that is the best for you. The amount of risk that you're going to take in any game that you play in, and compare that to the size of your bankroll. I mean, if you have a $10,000 poker bankroll, it's not that much different than having a $10,000 account. Maybe you're going to risk $300 or $500 in a particular poker game, just like you might risk $300 or $500 in a particular trade. The percentage of capital you're committing in a trade or in a game. And overall, a good poker player has very good understanding of money management. The next thing we're going to talk about is strategic approach and how important that is to both trading and in poker. So in trading, it's important to decide your best choice of strategy overall that you're going to be using, or strategies, the trading vehicles that you're going to trade in. You could be an option trader, you could be a futures trader, you could be a stock trader, you could be a multiple strategy trader. You might be trading as a professional, or maybe you're trading as a hobbyist, maybe you're trading part-time. There's a lot of different variables to the approach that you're going to choose. A poker player really does the same thing. He may be a Hold'em player, or maybe an Omaha player. He may be only a cash game player versus a tournament player. Maybe he's really good at multiple games and be playing Hold'em and Omaha, and be playing limit or no limit, and many other things that are variances in the strategic approach. And he may be somebody that plays full time and is on the poker circuit, the tournament circuit, or he might be somebody that, like me, kind of plays once or twice a week, or somebody that's kind of a fun type poker player, and then just playing occasionally. And your strategic approaches are going to be very different based on the style of trader you are, or based on the style of poker player that you are. So, those are kind of some real basics. You're going to have a plan, and you're going to do the best you can to follow your plan. Whether you are a trader or a poker player, you're going to evaluate the strategic approaches that there are, and you're going to choose which ones of those are best for you, and what is the best fit to your engagement in the market based on who you are, what your lifestyle is. For me, poker now is kind of, a fun and challenge thing to do. And maybe when I retire and spend a lot more time doing it, or play more poker tournaments, it's going to be, let's say, less of a hobby and less of fun, and maybe more important to what I do overall. So it's every person fits into each of those things in a different way, and I bring that up because of how important that is for you to decide as a trader. What your engagement is in the market, what your strategic choices are going to be, what is the best vehicle for you to trade that fits into your personality, your market experience, your capital, all of those things. Are you going to be a multiple strategy type trader? Are you going to be a option trader that has a strategic approach and has 30 positions on at once? Or are you the type of trader that fits best into scalping E-mini futures and taking no positions home at all? Do you do this as part-time because you have a full-time job and that's how you earn your money to live, in a full-time job? Or is this full-time for you? And therefore your approach to it is going to be different, because it will probably be important to paying your overall bills. So all of those are really important, and these are really big similarities when I look at the quality of poker players that are out there, and the success in poker players, and the same thing for traders. Pretty similar traits. We're going to talk about personal traits in just a few moments also. Now, one of the next big things we're going to talk about in the next slide is understanding probabilities as a key to being success as a trader and as a poker player. So we'll talk more about that. So when you're, if you're an options trader and we're deciding what trades you want to put on, you're going to be looking at your POP, your probability of profitability in options. It's essentially, the odds of a trade that you're going to put on. Now, believing that it's a zero-sum game, if you put on something that has a 2-to-1 risk reward or a 66% POP, your odds are that you're going to lose, twice as often. You're going to win twice as often as you're going to lose, but when you lose, you're going to lose twice as big as you're going to win. So that's kind of zero results. In order to be profitable, you have to figure out ways to trade that based on other aspects of your analysis, and based on market activity, fluctuation, and your ability to read situations where the results are likely to be outside of the statistics. So that's where you get a statistical edge, when you can figure that out. That often occurs when you are doing something in far out of the money options, like a far out of the money strangle, where your probability of profitability may be 4-to-1, but the pricing of the implied volatility might be well higher than that. So you might be able to get a much better potential return in there. So it's about evaluating the probability of profitability, and then evaluating, do you actually have an edge in there, or is there some actions that you can take while you have the position on to take advantage of specific market situations that then improve what the statistics show is your odds of being profitable in it. When it comes to poker, a lot of this is about starting hands. What's the quality of the starting hand? What is the type of betting that I can do to improve that quality of that starting hand? A lot of that is a lot like trading. In trading, you may look at the odds of success based on your technical analysis. I basically do that a lot with cycle analysis. It's like the odds of a starting hand in poker. It's also the odds of the number of opponents that you have. The odds of the amount of bet that you're going to put in versus the amount of money that's in the pot. We'll talk more about pot odds coming. Also, your EV, or expected value, that is in the pot, or the equity that you have based on the hand that you have versus what you can see in the flop or cards that are out there. You have a specific equity based on the results of how your holdings interacted with the flop, the cards that are coming out. So there's tons of decisions to make and tons of ways for you to evaluate probabilities in trading and in poker. And that means that people that spend the time in order to understand that, to have a great understanding of how to best understand the probabilities, how to best be maneuverable so that you can improve that situation based on the environment that you're in, the market environment, or the environment of the nature of the table that you're sitting at in poker. There's amazing similarities in that. So we're talking about understanding the probabilities to to success in trading and in poker, a lot of that is also about decision making, because in both cases you're really making decisions on incomplete information. You have some of the information or a little tiny piece of the information, but you don't know what's going to happen in the market 5 minutes from now or 3 days from now. A poker player doesn't know what's coming on the turn, which is the fourth card, or at the river, which is the fifth card, in the common cards that are out there. So you're acting on complete information, but you still have some sense of the probabilities based on the information that you have. So it means really having a good understanding of what could be coming and how you maneuver your position, or how you maneuver your position on the poker table in order to improve that situation. Also, traders that are very successful really understand the importance of batting average. Now, I talk about batting average a lot, and especially do that in my workshop, 5 Essential Building Blocks to Successful Trading, where I talk about the importance of the win-loss percentage. Where your wins should be bigger than the odds would say that your wins should be, and your losses would be smaller than the odds overall say that your losses should be. Now, when I say that, you don't even know whether I'm talking about trading or poker, do you? Because it's exactly the same in both. Being able to make sure that your trades yield a larger number of wins than losses, or for option traders, it would be a bigger gain based than the probabilities would suggest, or a smaller loss based on what the probabilities would suggest. Again, that would be exactly the same for poker also. So it's really important to be able to have that batting average, and it's a lot of that is about your ability to evaluate market conditions. If you're in a condition where you have a specific probability of profitability, and the implied volatility is actually bigger than the true volatility in the market, then the chances are you have an advantageous position on. For a poker player, he's going to be evaluating the condition of the table. If the table is made up of all very aggressive players, with, in other words, they're putting a lot of money in weak hands, then it makes it it's going to be a volatile table. And it makes it more important to be playing only higher quality hands when you're playing at a table like that. So, in other words, they're loose, you tighten up. The market's loose, well, you get a little tighter because the volatility gets really high. So there's some really important similarities in there when you look at, evaluating market condition, evaluating the table condition. It switches also for tournament play versus cash play in poker, where there are some differences in there, because early in a tournament the play is very different than later in a tournament. Trading around what we call the bubble in a tournament, which is the point where you're, basically just nobody's in the money yet, but when a couple players more are going to bust out, then everybody will be in the money. So the play around the bubble is very different. So there are, a trader trades differently, and when they're really strong, again, we'll talk about that in a moment on personal trades, on being able to evaluate market conditions. And, when the opportunities are greater, they're taking, advantage of that. When the opportunities are much smaller, then they're taking far less risk. And that's what a good poker player does also. So that's some really important information also. So, of course, in trading, everybody talks about how important it is to be disciplined. Discipline is, as I say, probably the most overused and least understood word that is used in trading. So this next one is about the disciplined approach and how that's imperative to success in trading and success in poker. So what I talk about in discipline is what I call my 6 important areas of discipline. And I'm not going to go very deep into them right now, but you can, when you listen to this, you'll really get a sense that, what's really important to really be on your game. That's kind of a cliche that a lot of people use when they're and talk about getting ready for trading. Getting ready to be on your game, right? It's when you're in poker, it's about being on your game also, certainly. So the 6 areas I'm just going to touch on briefly are your pre-day prep. I mean, what do you do to get ready? How do you get centered? How do you get in the right mental space before your trading day starts, or before your business day starts, so that you can be prepared for giving trading the proper attention and giving life or business the proper attention. And it's the same thing for playing in a poker game. It's about getting the mindset set correctly, knowing how you're going to play in one stage of the game versus another stage of the game, knowing how you're going to approach what you want your mind to be if you get low stacked, and in other words, you've lost some hands, you haven't gotten any cards, and now everybody around you has more money than you, and how you're going to get your mind right for the play that you need to do based on how the game has changed. So there's lots of things to do with pre-day prep, and a lot of traders don't spend a lot of time on that, and that's really important. The next thing is about focus, distractions, boundary setting. So many traders, they allow themselves to be distracted by life, by things going on, by important, maybe things that are important that they get called upon to pay attention to. And at the same time, it's important to draw strong boundaries with other people and with yourself, to make sure that you're well focused. A lot of traders that have issues with discipline that lose money, it's kind of a vicious circle. They lose money, so they feel pain, and then they distract themselves. And because they're distracted, they're out of focus, and they lose more money, and then they feel more pain, and then they go to more distractions. And it's this addictive cycle that goes on. And I've been very guilty of that in my trading past, and I'm even guilty of that sometimes playing poker. Because there's a balance between allowing myself to be distracted, to keep myself calm while things are not going well. And I might do that by, looking at my iPhone, doing something doing something that's a healthy distraction at times, or overdoing it and just getting completely taken out of the game, which is something that I think that a lot of traders allow themselves to do. So there's good focus, there's allowing limited number of distractions when it's important, and the importance of boundary setting, creating your study space, telling your kids and spouse or significant other what the time is that you're going to spend focusing on trading, so that there's no sense of disappointment, either in you yourself or in them. Everybody has an expectation. That's important. If you watch my video, Trader-Spouse Relations, I get a lot of compliments on that one. In our video library, I think that you'll find that to be really valuable. So it's focus, distractions, boundary setting. That's number 2 of the discipline. Next one is research, study, reading. It takes years and years of study and practice to be a successful trader. I was actually one of the lucky ones, and I was in a situation in 1974 or 5 where there were a lot of edges, and I could turn the corner pretty quickly. It still took me about 8 months to turn the corner and to be able to figure out how to become successful. Nowadays, it takes much bigger bankrolls. It's a much more difficult situation because you're not making a market that's 25 or 50 cents wide. You're dealing in marketplaces that are a penny wide in stocks or a tick wide in futures. So those edges are gone, and it means research, study, trying to figure figure out the new edge, which is basically a momentum edge these days, and how to be, how to be with the market and figure out the best way for you to engage based on who you are. It's constant knowledge building, and that means that you have to block out the time. It's the exact same thing for poker players, really learning the game, understanding the probabilities, learning all of the nuances, and playing against multiple players, or heads up, or playing weak hands versus strong hands. And I could name differences for hours that in potential situations that a trader has to be able to handle, and a poker player has to be able to handle. Another important aspect, number 4, is physical care, and emotional care. Readiness for the game. In other words, are you operating on 4 hours sleep because you have a new baby, and you're getting up and taking care of the baby, which is great. And that means that your engagement in the market's going to have to reflect what your life is at that time, or maybe you've got other issues in your life that are bothering you, and you're not sleeping well at night, and that's making you have a very difficult time with a good attention span for the market. So it's physical care, it's eating the right food, it's getting the right exercise, and it's emotional care. It's what's going on inside of you that you're not attending to, that you don't understand, that you haven't built the self-awareness for. We'll talk more about that and emotional reactions in here. But it's about readiness for the game is what it really be. The trading game. I don't like to use the word game for trading, but that's the comparison today. Or being a poker player. The next one is your commitment to your plan. It's about your looking at your plan often. It's about record keeping and keeping good records, and really you do that to know what's wrong, how to tweak your approach to the market, how to tweak your game. How much money did you make or lose? What was it based on? What was the market environment at the time? Were there any unusual situations? Did you take advantage of situations well, or did you not? What can you do better? These are all kind of things that you would do in a journal that may be part of your pre-day plan that you're working on. So good poker players do that too. They keep records, have a good sense of what went right, what went wrong, how they can improve their game. And the next one is accountability. Now, this is a little different in trading than being a poker player, but still it's about the deal that you make with yourself. It's about the deal that you make with your partner or significant other. It's about making commitments and sticking to them, and when not sticking to them, owning up to it, whether it be to yourself, to your partner, having a regular accountability check-in. It might be with a trader buddy, it might be with a psychologist, it might be with somebody in your church. It could be any number of people that you would check in with and just be accountable to, because then when that's the case and things go wrong, there's less chances you're going to just kind of look away from them, rather than make the proper adjustments and operate in a place that's really healthy. So that's the discipline approach, and I think imperative to success as we look at 6 different areas that are really important to discipline. The next one that we're going to look at in here is the importance of having a strong understanding of our emotional reactions. So whether you're playing poker or whether you're trading, there are a multitude of times that we can be easily triggered. Now, when we use the word trigger, it means that an event happened and we had an emotional response to it. And that emotional response could be at many different levels, and it could be many different emotions that are coming in, and even to the point where we're so flooded with emotion that it's very, very difficult to make good, strong decisions at that time. So in both poker and in trading, it's just very easy to get triggered. So it's understanding our emotional reactions, as there are a multitude of opportunities to make mistakes. It's about accepting that we will make mistakes, that we'll lose money, and that all of those are learning opportunities. In fact, losing money and doing it correctly is such a giant key to being successful in trading. In other words, you have a particular loss parameter, and you take a loss within that loss parameter. It's within the expectation. Then you just move on. It's even something that you can celebrate. I did it right. I lost money and I did it right. And now on to the next one that, I know overall is likely to work for me. That's a real confidence builder when you're able to do that. And making, really accepting that we will make mistakes and lose money. It's the same thing for playing in poker. There's every single hand has got a particular odds structure to it. And as the hand progresses, those things change significantly. And we will, at some point in a good majority of hands, make the decision that surrendering, and surrendering is a good solid word. In other words, it's time to give up the hand. The odds are no longer that it's going to work for us based on the amount of money that we have to put in the pot from this moment to the amount of money that I can get returned to me at that moment. It's an amazing statistical way to approach poker in a mechanical way. There's also multitude of other aspects to it, of what we understand about our opponents, what we understand about game conditions. But the truth is that if we do, and if we surrender the hand at that moment and say these odds are not well in our favor, no matter what the result is afterwards, it was the right decision. It's the same thing to accept that we'll lose money because we'll make the right decision to exit a hand, make the right decision to exit a pot. We don't know what's coming. This is the incomplete information, what's going to come after that. But it doesn't matter, because simply what we did was say the risk rewards are no longer favorable. So we exit the situation. If we put more money into that situation, that might be rolling a trade where there's no economic or sense to it, or no analytical sense to it. It may be putting money in a pot because, I got so much money in there already. I'm already losing so much money. I'm just going to see if I can get lucky. I mean, that's how a weak poker player would approach that. So you can see that there's a lot of strong comparisons in there. Next thing is building emotional muscle. I mean, this is really what I talk about a lot in my workshop, the 5 Essential Building Blocks. And that helps you avoid emotional decisions. In other words, you can fend off the emotional trigger from coming and having you make decisions based on how you feel versus an intellectual process. And that's so important in trading, and immensely important in poker when people are trading based on emotional decisions. Then they're very likely going to not take losses, or they're going to increase losses. When a poker player does it, he goes on tilt, is what they say, and all of a sudden he's pouring money in on bad hands just to try to feel good when he gets a win, even though it's a poor odds situation. So there's a lot of commonality in there, and being able to know when your emotions are coming up and then fend them off by learning to do so through processes that I talk about in other videos is really important. Another thing is importance of avoiding victimization in trading. In other words, the market is our enemy. The market did this to us, making yourself the enemy. Oh my God, I did that again. I can't believe I did that again. So it's either self-victimization or victimization from the market, and that brings up the emotions, and our decision making is really poor. I see poker players do it against the dealers, and where they're the victim of the dealer, or they're the victim of the deck, or the probabilities are there. It's all statistical information. We do bad in poker, we're a victim only of our own poor overplay or benefit from our own good play. And in either case, it's important to keep emotions as steady as we can. That's the case in trading also. Avoid that sense of being a victim. I did a video called money versus process, and that's really an important thing here. Not paying much attention to your money and how much you're making or losing. If it's all within the parameters you design, that's fine. It's much more about the process, how you're going to approach the market, how you're following your plan. And if you do that, you're going to have a lot easier time being at a level mental place. Watch that video in the library if you haven't done so. Another thing that I think is really important, and I learned this back when I was in 1976, so I'd only been trading for about a year and a half, where it's important to be playing in the right size game. How do you like that? For the poker analogy. And in the trading analogy, it's trading real money versus simulated money, trading, real money versus paper money, and playing and trading in this appropriate size. So you're basically in a comfort zone, but maybe pushing the edge of that comfort zone a little bit, so that it's enough so that you really have to pay attention. And it's not so small that the emotional reactions can't come up. You cannot become a successful trader when you're trading too small. You have to trade big enough for the emotional reactions to come up, to deal with the psychological issues that you won't even know about until you're trading with real money, or you're trading in a size that's big enough to get them to come up. One of my mentors taught me that way back in 76, and really encouraged me to make sure when I was really struggling and gotten into a bad losing streak, that I was not playing in a penny poker game. You put me in a penny poker game, I don't even care. I mean, I'm throwing in money and it makes no sense. You put me in a real poker game that is a limit that pushes my edge, then I'm really paying attention. I'm really using my skills and working to keep my emotional reactions where they should be. So that's the importance of playing in the right size. For those of you that are out there that are trading simulated, and I know that there's a number that watch my shows that do so, it's really important that you only use simulated trading for the purpose of learning the language of the market. Once you're beyond that, you should go to whatever the minimal next increment is of real money in order to have the psychological reactions that you need to become successful. So the next thing we're going to look at is the many personal traits that are in common between successful traders and poker players. Now, I did a video on this also. There's little pieces of that taken out of that in this discussion, and you can go see that in the library also, about the personal traits that bring success and challenge for traders. So the first one is that we're going to talk about is optimism. There's traders that are optimistic. They believe that they're going to have the next opportunity right in front of them, that they're going to be successful. This is a lot in line with the law of attraction, which I'm going to be doing a video on soon. I avoid the woo-woo discussions in law of attraction and much more the scientific discussions about it. If you believe that you're going to be successful, then the actions that you will take will be in alignment with being successful. You create your own reality. So when you're optimistic and you believe that, well, the next opportunity is coming, you're going to take losses appropriately, because it doesn't matter, because the next opportunity is right down the road. You expect success. It's the same thing for being a poker player. You can give up the crappy hands. You can give up the weak situations because the next opportunity is coming. It's the next hand or the next tournament or the next game, whatever it might be. If my loss is within my design parameters in poker, then I know I can come back for the next game where I have a good probability that I'm going to do well. Same thing in trading. Really important. Another one is high self-esteem. A good trader really holds on to the confidence in difficult situations, knowing that, man, I'm in a situation now that's kind of gotten beyond where I wanted it to get. The market environment changed. Everything is difficult, and I know within myself that if no matter how I react to this situation, be it appropriate, it's not going to take away from who I am at all, no matter what the end result of this is. And then we make much better decisions. It's the same thing in poker. All of a sudden you make a decision, you take a bad beat because you had you believed you had the highest probability, and the lowest probability is what happened. So you lost the hand and maybe got knocked out of a tournament. Well, you made the decisions that you knew were the right decisions, and therefore it doesn't have any effect on who we believe we are. That's high self-esteem, and that allows us to come back the next day for the next trade, for the next opportunity in the market, for the next tournament. A lot of similarities when you look at that. Another one is flexibility. So how easy do we adapt to the changing conditions? Boy, that's in the stock market, that's a real tough one. Lots of people that write to me have not adapted to the momentum market we've been in. Even I, after 43 years, have struggled with adapting to the momentum market. It is a massive challenge when you get into an anomaly situation, and it still means that to be successful, you have to do your best to adapt, adjust strategies, adjust the risk parameters to fit the market conditions. It's operating in the nature of the market that we have right now. It's adjusting when your trading is off to the risk you take, to the strategies you take. It's the same thing in trading and playing poker. I recently had a 7-game losing streak in poker and backed off quite a bit. Took a couple of weeks off where I didn't play and tried to evaluate what was going on for me, and I've since broken that losing streak and had a couple of wins right in a row. So I knew that it would happen, and it's an anomaly that I would lose 7 games in a row because I'm a pretty decent player. So it does happen, and you can lose 7 trades in a row. You can lose 7 trades in a row that have a 2-to-1 risk of profit in a trade and still losing them 7 times in a row. So we have to be flexible to adjust to conditions like that happen. Next thing is trait is confidence. Traders that are confident and poker players that are confident evaluate data quickly. They make fast decisions. They're confident that their instinctiveness is based on their historical knowledge gathering, and then when they feel it, they go with it. That's an intuitive process that comes up when we have confidence. Our reactions are appropriate. We don't go into this analysis paralysis situation where we're really slow to make decisions. That good traders don't do that. Good poker players don't do that. And if they do that, then you know that they're indecisive, and all of a sudden somebody will say clock, and that means that the dealer is now giving them like 1 minute to make a decision because they can't. They're having trouble evaluating the conditions of that hand at that time. So that tends to be a weakness, and it's okay to take time at certain times, but basically we want to make sure that our decision making is based on our knowledge, our intuition, and being confident that those things overall will bring a positive return. The other side of that is impulsiveness, and that is reacting very quickly to everything, because there's part of us that needs to show that we can do that, and it means taking excessive risk, often in trading and being impulsive, adding to bad positions, and taking excessive risk. And the same thing happens for poker players. They've got a crappy hand. They think that they can put a bluff out there when their play has been really weak and there are really strong players at the table, and all of a sudden they find themselves out of a tournament or out of money and pulling in more money out of their pocket in a cash game. So it's important to act in confidence. If you believe your intuitive process, and let yourself evaluate for relatively quick decisions. The other side of that is good traders also have patience. So how do you do both? I mean, how do you have the ability to react quickly and be patient? Well, when you're patient, you're evaluating situations, right? You're taking the time to really look at what the highest odds situation is, what the market conditions are, and if that evaluation goes quick and our intuitive process clicks in, then we can make fast decisions. If it turns out that nothing is clear, you might make a fast decision to do nothing. See how that works? You can take the time to evaluate and be patient to do so for the highest probabilities, but then the decision making is rather quick once your evaluation process has gone on in a healthy way. The next thing is so common to both, it's unbelievable, and that is that you're not subject to the risk of gambling. Poker playing is a skill. There is a luck aspect to poker, just like there's a luck aspect to everything. You put on a trade that you think you've got a 3-to-1 positive risk reward, but something happens like a news announcement comes out and you get blindsided, and that's bad luck, but you had a 3-to-1 risk reward, and chances are 3 times versus 1 that you're probably going to make money on it. So there's a luck part of it involved. But when things go wrong and then you start betting money to get losses back without the intellectual process going on, that is gambling. It's the same thing that goes on in poker. When you're betting in a low odds situation where you haven't set up a bluff properly, or you're playing hands that are likely to knock you out of a game because your stack is relatively low and your emotional reaction is coming up, then you're setting yourself up and you're gambling in order to do that. So there are certain times in poker where you take more risk based on all of the situation, but it's not gambling. It's a calculated risk. It's exactly the same when you are playing poker and when you are trading in the markets. And the last part of this is that traders control their trading approach. They stay in their plan. And that's what successful traders do. Their plan may have built in there that they do certain things when there's volatile markets. They do certain things when there are quiet markets. There are certain strategies they use in one market, strategies they use in another market. They stay in the plan, and good successful poker players do the same thing. They have a plan of how they're going to approach a tournament, let's say, as to how they'll play early in the tournament, how they'll play later in the tournament, the way they'll try to build their stack, and the way aggressiveness they'll have based on different stages of the tournament, more aggressive or less aggressive based on market conditions, more aggressive, less aggressive based on the conditions that exist within that particular poker table. So there is a lot of similarities to that also. The last discussion we're going to have in here is about that one that annoys me, and that is understanding true pot odds. So this is an interesting discussion. We've got it's a little bit longer than some of these other ones I've discussed, but I think a very important discussion. Understanding the true pot odds. So some kind of sell the idea that because a market has gone in one direction for an extended period of time, that the odds are high that there will be a reversal. Some say even though that you have losses, that you get, pot odds by staying in the market because odds favor a reversal. So those are two different things. One is because the market's gone a certain length of time that odds favor a reversal. One is because you have a specific amount of money that you have lost in the market, that your odds are higher that there will be a reversal and you get money back in the market. Two different things, almost the same problem in understanding pot odds that gets you, and it can get you in a lot of trouble. True pot odds are evaluated by numbers that you know, or by numbers that you have a very, very good sense that you can know in poker. In other words, if you know how much money is in front of your opponent, you know that's, if you're playing in a heads-up situation, that's the most amount of money that opponent can bet, and therefore that's the most amount of money that you could lose in that situation. So, basically, when you're figuring true pot odds, you basically do know all of the numbers. True pot odds are evaluated by the amount that you have to put in the pot in your next bet. That's important because we talked about people staying in positions because of how much money they've lost, right? And that there might be a reversal. True pot odds are evaluated by how much money you have to put in your next bet versus the amount of money in the pot now, or that you can calculate may likely be in the pot. We call that EV, or expected value. So it has nothing to do with the amount of money that you have put in the pot up till that level. So that's a very important distinction. I'll give you an example. Let's say that there's $100 in the pot. My opponent bets $50 to me, and we've seen the flop, so there are two more cards yet to come. I look and I have a suited hand that can also make a straight, and there are two of the suit on the flop. So there's a 4 flush and a 4 straight. I need one of my suit for a flush, or I need one of my suit for a straight, one of my hands for a straight, and an open end straight. I believe that if I catch either the suited card to make the flush or I make the straight, that the likelihood is extremely high that I will have the winning hand, especially if he's been an aggressive bettor from the beginning, and I can evaluate he might have a high pair, or he might have ace king or ace queen, and maybe has caught a high pair, one pair. So there's pretty good odds that if I catch the straight or the flush, I'm going to win. I mean, it's probably above 90%. I can figure that. I can also figure that I have two chances to hit my straight or flush: the turn, the 4th card, or the river, the 5th card. There are 17 cards in the deck, 9 suited cards, and I have an open-end straight, so there are 8 cards that can make my straight, a total of 17 cards that will give me a chance to win. But there are 2 tries at it because there are 2 more cards coming. So I have 34 possibilities to win of the 47 cards I didn't see. I have a 78% probability of hitting my straight or my flush based on that. Well, the opponent bet all of his money into me, $50. Now, if there's $100 in the pot, and he bets $50, so now there's $150 in the pot. I have to put in $50. I'm getting basically, 2 to 1 on my money. $50 is 3 to 1 on my money, right? But I have a 78% probability of hitting the hand. So I have a statistical advantage in that hand. Now that may sound a little complicated, but that's figuring out true pot odds in the hand. If it turns out that the hand was much bigger and I would have to risk my entire tournament, in other words, put all my money in, not get great pot odds, I might not risk all my capital. In fact, there are situations where, let's say I have a small pair and I think a guy has, ace king or ace queen, I have an 11 to 10 probability of winning the hand. However, if I have to put all my money in and I lose the hand on essentially near coin flip, then I'm out of the tournament. I might have a statistical advantage, but I may choose not to take it because it takes me out of the tournament. So there's many calculations that are real in figuring out pot odds. The important part of that, not taking that 11 to 10 situation, is about preservation. I've decided I was going to preserve my capital, wait for a higher odds situation where I could double or triple up and get back in the tournament and get the money. So I'm evaluating the conditions of me in the tournament at the time, and about preservation. This is very different than fading momentum and guessing that there's going to be a reversal in the market and saying that the market's gone up, for 47 days without having a 1% move, 257 days and not having a 3% correction. So that justifies me being short and getting run over by the market and losing more than I wanted to long ago, and now adding to those losses because the odds are that at some point there's going to be a reversal. And that's what I hear a lot on other networks, and why I think it's so important to bring that up. Now, your eyes might have glassed over when I was going over those statistics about poker, but the important lesson to learn is that there's no edge in being short today because the market went up yesterday, or the market went up 10 days in a row. The edge is about your plan. The edge is about the way that you manage your own money and protect your own losses and preserve your own capital. And when the market conditions change, or when the conditions change at the poker table, and things become advantageous to be in the direction that you want to be, it might be being on the short side right now, the market will make it clear to you that that's the case. You don't have to be short at the top and believe that you have pot odds because the market's done something for such a long period of time. You can get yourself into a pot odds situation when you have momentum going your way, as it's been on the upside for a long period of time. So I say to you, don't believe in the false purveyors of staying short in a rampaging market situation under the guise of pot odds. That is simply wrong, and those people that say it simply don't understand. So that is the comparisons between being a trader and being a poker player. I would guess that you found it interesting. I would guess that there are things in there that might be valuable enough that are tweaks to your style, things that you haven't considered, things that you haven't done yet to improve your probability of success overall in the market. And if there was a major aha for you in what I just shared, let me know. It might be an aha in your trading and things that you're going to do differently in your approach, and it might be an aha in your poker playing. And if that's the case, well, then I know that I brought value to you in something. That's it in style, strategy, and plan, comparing trading and poker playing. And I'll see you in the next segment. This is our Level 2 trial membership. We are starting this right now for new subscribers. This will not last long, and this is the last time we will have this pricing right now. What this includes is the stock index report live stream that you can see. What that is live right on your computer. You don't need a special platform, of the S&P 500, NASDAQ, and Russell. I'll show you that in a moment. Our stock index report, which we put out every day, the snapshot, the SIR, you'll get that every single day. You'll get our weekly stock index report, our weekly ETF review, Slimulator Momentum Tracker, which is for position traders and investors, over 1,000 different stocks that you could look at, ETFs, with our algorithms built into it. With momentum conditions, you're going to see fantastic stuff in there. Just amazing. You'll get our complete library, 600 plus videos in 9 categories that I've done, teaching all kinds of aspects and showing all kinds of analysis in the stock market, and our new trader workbench for trade planning. Absolutely amazing. What's more amazing, you'll get all of that for $22.50 the first month. There are even bigger discounts if you take quarterly discounts. How can you possibly pass this, especially if you're an active trader? Just go to askSlim.com, top of the main page. You'll see the special link there, and you'll be able to sign up for the 1 month or for the quarterly. Or if you have questions about that or have an issue with that link, then write to Matt at askSlim.com. Let me show you just some examples of what is in here. Just absolutely mind-boggling. This is the SIR live stream. Now, this was from the 24th. This was from Wednesday, the 24th. And this is for our intraday charts, really for short-term trading. These are 15-minute charts of the S&P 500, the NASDAQ, and the Russell. What it has on here is what we call our reversal scout. This helps you with your directional decisions. And when it turns up, which it did the day before, you generally get upside moves. You're going to get our resistance levels right in here, and you're going to get our, these are called acceleration zones, the yellow ones. The probability when they enter the acceleration zone that they will continue is extremely high. You can get the numbers from that if you want. And once it gets in there, you can see it just explodes through. This is how you catch the big trades. And sometimes when it dips right into the support, as you could see right there and right there. Just absolutely great. And you can also see which are the strongest and weakest of these indexes, which was really clear as the NASDAQ was the weakest and the Russell was the strongest. And you could see that. It's incredible. That is what you saw on the up day on Wednesday. How about the down day on Thursday? Let's take a look right over here. And yes, what happened was you got this early downturn here in the reversal scout, and it went down all day long through all of those zones right over there. Just absolutely incredible. Through the acceleration zones where you catch the biggest trades, and then got into this area, but it was late in the day and couldn't even turn around, as you can see that. So just fantastic information here. How about what's going on today? Let's put it up live right now for you to see. Here you go. This is now live on my screen. And we started out the day choppy, moving down, but then when the reversal scout turned up, you can see what happened, and it came up right to resistance, and you're getting some resistance right over there. You get the NASDAQ moving up through those acceleration zones. Beautiful. Hits the resistance, now pulling down. But you could see what's going on. What's the weakest index right now? Clearly the Russell. So if you wanted to be doing a pair trade, well, you would probably be buying NASDAQ today and shorting Russell. If you wanted to just buy and you didn't know which one, well, you could see which is the strongest one in here today, which is the NASDAQ. Just absolutely fantastic. In resistance right now, failing from resistance, getting through the acceleration zones, hitting resistance and backing off. If you're a short-term trader, I mean, this is just unbelievably fantastic information when you look at that. So that is a look at the live SIR live stream, and you can have this right on your charts. Just absolutely fantastic, amazing. Here is the library. 3 new videos every week, 9 categories, over 600 videos. I'm not going to read it to you. You can read it, but just incredible things. You can see trader psychology. Got lots of great things in there about how you can deal with personal issues that may be getting in your way of success. So just unbelievable stuff, including Future Speak, which we do every Wednesday, our certainly most popular member video. That's what's included. This is the only until March 14th. So this is essentially about 2.5 weeks. The final opportunity at this price for all of these great things that you're going to get. You saw that, $22.50 for a 1-month trial, quarterly discounts, bigger discounts. Go to askSlim.com, top of that main page, and you can sign up right there, or questions right to Matt at askSlim.com.